Welcome to the Financial Inclusion Week panel on inclusive finance for the blue economy. My name is Anindita Chakraborty and I am your moderator. Financial services play a critical role in the blue economy, yet the sector continues to be financially underserved and marginalized. For every $1,000 in global philanthropy, small scale fishers get only 10 cents. What is the blue economy? Simply put, the blue economy refers to economic activities related to oceans, seas, and coasts. Fishing, aquaculture, maritime shipping, coastal tourism, and renewable energies are examples of some activities related to the blue economy. Our session today will focus on small scale fishers who rely on the blue economy for their livelihood and sustenance. Why does this even matter? There are three key reasons. First, the blue economy plays a critical role in global food security. Over 3 billion people worldwide consume fish and seafood. And for low income people, particularly, this is a vital source of nutrition. Evidence shows that households which live in areas where close to fisheries, fishing activities, or are partially or fully engaged in fishing are less likely to be income poor, have better safety nets and food security. Second, oceans are a very critical source of, they account for more than 70% of global biodiversity. This includes coral reefs, mangroves, and seagrass. Oceans play an essential role in carbon sequestration and also act as natural defenses during seawater rises, storm surges, as well as erosions, which plays a vital role in providing resilience and protection during extreme climate events. Yet, less than 8% of global oceans are protected. Third, and most importantly, we don't talk enough about the blue economy and the people who depend on it in financial inclusion. This is the 10th anniversary of Financial Inclusion Week, and perhaps this is the only session dedicated to the topic of the blue economy. The blue economy is complex. 500 billion people, or 6.6% of the world population, depend partially or fully on the blue economy for food security and livelihoods. Over 40% of them are women, and this number is likely underreported because, as we all know, women's role in economic activities are often informal and also in activities that are unpaid for. These last mile communities are often hard to reach. Given their geographic remoteness, as well as social and political challenges in implementing coastal protection programs, this segment is largely been ignored by the development agenda. On a positive note, the United Nations 30 Cross 30 campaign has set targets to protect 30% of the world's land and water by 2030. This can be an important strategy for protecting biodiversity while enhancing the livelihood and food security of low income population and also helping build their adaptive capacity against climate shocks and stresses. Today, we have a panel comprising organizations doing pioneering work in innovative finance for the blue economy. I'd now like to introduce the panel. We have with us Carlos Arango, who is the Director of Financial Resilience at RARE's Innovative Finance team, where Carlos focuses on developing financial solutions to help communities work on restoring and protecting coastal ecosystems. We are also joined by Sarah Conway. Sarah is the director at the Disaster Risk Finance team at WTW, where she focuses on the design and application of parametric insurance products for ecosystems and associated livelihoods. And finally, we have Katerina Caricati, who works as an impact finance specialist at Levoca. Katerina was a part of the team that developed the world's first small-scale fisheries impact bond. Welcome, everyone, and thank you for joining us today. I'd also encourage the audience to type in your questions in chat. So, in terms of questions, Carlos, I'd like to start with you. RARE has been working for over the past 50 years with small scale fishing communities across 60 countries. Could you talk a little bit about RARE's work and particularly how it's working towards achieving the 30 by 30 campaign goals? And what are some of the outcomes that you're seeing in terms of enabling access to finance for small scale fishing communities?
Thanks, Anindita, and thanks everybody who joins the the panel today. Yes, we at Rare, we've been working. I actually read yesterday, today, we've been in over 20,000 coastal communities in the world in the past 20 years that we've been working with coastal communities. We have reached over, I would say, 500,000 fishers, and we have provided a lot of technical support for communities to actually own the protection of the ecosystem they depend on. Most of these communities, as you just mentioned, they are remote, they are in low income countries, they're difficult to access, but they derive their livelihoods from critical ecosystems that need to be protected for the well-being of the planet. These ecosystems are coral reefs, are mangroves. I mean, we've seen with climate change how these events occur with more and more strength every other year, affecting communities. Well, the natural barriers are those ecosystems. So we at Rare, we work with communities to protect these ecosystems. We have an approach in terms of, it's simple, it's called OECMs, it's other effective conservation measures. So we support the communities to implement what we call managed access and plus reserve. And this is a mechanism in which they, as the name said, they manage the access to their ecosystem, and they do this using science plus local knowledge. So on top of this, we also work with communities to develop their financial resilience. Why this is important? Because in the case of shocks and stressors and all these events, the communities will pull on their limited assets they have. In this case, is fish, the fish they have in their fishery. So they will immediately pull out of this. They will immediately liquidate their only boat they have to go out fishing to, pay for families' emergencies. So at the same time that for the community in their conservation efforts, would recognize that it has to be a level of financial safety net for these communities to be able to protect their ecosystem better. So currently, just we're working in Mozambique, Indonesia, Honduras, Brazil, Palau. I hope no, not forgetting some of the countries. And one of the things that we do really here at Rare is we provide a lot of information to the sector. And I just want to call the attention to a recent research we actually did with the Center for Financial Inclusion in the Philippines, where we were able to clearly identify in a beautiful island called Siargao that had a terrible event called Odette that destroyed a lot of the island and the fisheries. But we were able to identify that having this MA plus R in place, the community taking care of their own fishery, plus having financial mechanisms to support the communities, we were able to compare and to pinpoint that these communities, the ones that had the two of them working together, were able to come back quicker after the destruction that happens. So this is evidence that we're bringing to the sector to say we do not only need to do conservation, but also we need to pair this with financial resilience for the communities who are actually engaging in conservation. So we're bringing those very local sort of learnings, knowledge to a global stage. And that's the reason I'm really happy that we have here Sara and Katarina, because they have a very important partners for us to bring these solutions to a global stage. So, for instance, you just mentioned 30 by 30, and Indita, thank you so much. That's a huge effort all the countries are doing by the year 2030. 30% of the ocean must be under some form of protection. Managed access plus reserve areas are some form of protection for this, to get to this goal. But we come to a question, where is the money? Setting up managed access plus reserve areas costs money. You need to bring together stakeholders to pay for surveillance, for the workshops, for bringing the community together, for the voice to determine the sort of the boundaries of the fisheries, for sustaining the effort over time. So Katarina will talk more about this. This is one of the many solutions we're trying to bring into a sphere in which everything it's encompassed, right? We work towards developing a highly informal sector that depends on this. So the value chain of fisheries is highly informal. They still operate in cash. They are remote. We need to bring them to formal financial services. They need access to revolving credit as anybody else. They need access to buy boats, to increase the production, while at the same time protecting their ecosystem. So this is part of the examples. We're also going to hear from Sarah, bringing a much more comprehensive strategy in which local governments can actually pay to reduce the bad behavior of fishers when they go out and fish in bad weather and they die on that. And a lot of people actually spiral down into poverty because the head of the household died. So this is a comprehensive situation challenge that requires multiple stakeholders. And as you just mentioned it, in small scale fisheries, this is just happening, right? We saw this in agriculture happening 20 years ago, where financiers with the microfinance institutions and the financial sector realized that by supporting farmers pre-harvest, they were able to get their returns back, right? After harvest, because it's predictable, because you somehow can have some sort of yield after this. Small scale fisheries are unpredictable. You go out there fishing, you don't know if you're gonna go bring back fish or not, but you still have to incur in the cost of going out fishing. But understanding this is the role that we see we can do, bridging that to the financial sector. We can bring all that information for the microfinance institutions of the world to understand the cash flow of the fisher, to understand where the money in the value chain goes and flows, and to support the financial resilience of small-scale fishers through financial inclusion, which at the end is going to support conservation and adaptation to climate change.
Thanks, Carlos. And you made some really important points about involving local stakeholders and the important role that financial services play in building resilience and adaptive capacity of coastal communities, as we saw from the Philippines. I'd now turn to Katerina, who's also a part of this the project in the Philippines. So Katerina, Levoca partnered with RARE to design the world's first ever impact bond focused on sustainable fisheries and coastal protections. Can you talk a little bit about the bond's goal and why is it so crucial for global ocean funding?
Yes, of course. I think Carlos already made a great introduction of not only the bond, but also like RARE's approach, which of course is a critical part of it. So we believe that this bond has a great potential to showcase how can we finance 30 by 30, right? I think oceans is way underfunded. We definitely need like several instruments and like innovative finance. I think Sarah will later bring a very interesting perspective on insurance, which is like critical and definitely unsolved in the markets we have today. And well, the bond is being launched right now. We have been conceptualizing this with RARE for the past couple of years, and it comes from the fact that there are some large conservation finance. I think there is larger and growing interest from investors to enter in the climate space. But nowadays, it's very hard to even direct the capital. When the cases when the capital exists, directing this to the community is super hard because of the reasons that Carlos already mentioned. It's super informal. Sometimes like the communities don't even know how to access these funds. You don't have this structure. You don't have the formality needed to do it. So the idea was to have an instrument that served as a channel to build this bridge, and also in an efficient way, in a way that like help these fisheries to achieve another level in their services, really like grow in a sustainable manner. So how it works? So the bond starts with some upfront capital from these investors that are the ones that are taking the risk of the intervention. So investors give this upfront capital, and then it enables RARE to start the process. So RARE, over the course of 5 years, implements the managed access with reserves. That is the process that Carlos just mentioned. And it has some goals, both goals in the implementation, but especially goals in the environmental side. So protecting reefs, fish biomass, like you have this environmental goals, and you also have goals with the community, helping them to formalize, helping them to establish themselves, for form local associations, etc. As WARE goes and achieve these goals, what happens is that you have some outcome funders that we call, which are organizations, governments, multilateral institutions, which are very interested and connected to this outcome. So for example, for the government, it's great that you have like more established fisheries, more formal fisheries, and also the conservation of their oceans. The governments are very bought in the 30 by 30, so they are interested in these outcomes. Same for the large multilaterals, all these climate funds existing. So these outcomes funders, they commit up front to buying the outcomes when they are achieved. So as we achieve the goals, they go and buy these outcomes, pay where the investors can be repaid, and also the program can keep rolling and the funds are they are recycled. So this is the very first time that this is done for small-scale fisheries. This is a very consolidated model, for example, in the employment sector, in the education sector. It has been done a lot. So I think it's very interesting to see how this translates to nature, because it also brings the start of the conversation on how to price nature assets. How do we price nature? We know that the nature has a cost, but we don't know the price. So this is also very interesting. I think it connects a bit up with the insurance world in a way, because it's also the same thing of like, okay, if I don't price now, someone will price later. So this is very interesting. I think it has brings also the conversation of effectiveness and like who takes the risk, right? So you're saving the conservation capital only for the outcomes that are achieved, and you have private investors taking the risk of the intervention, which is also super important. And you also bring some flexibility, which is critical for scalability, right? Like if you want to scale this, if you want to, now we are doing it in Indonesia, the idea next is to do a regional bond and then like scale for all these areas. I'm Latin American. I hope sometime we bring this to South America. I think it can be very valuable. And when you're scaling, you need to adapt the intervention. And one of the big challenges that we have today with aid, especially, and with like global funding, is that like we are very focused on the activities, when often we need to just adapt, see what's working. And if it's not working, we need to redirect the route. And when you say like, okay, my last goal is to improve incomes in fisheries and or like preserve fish biomass and coral reefs, you need to go for that goal, and you need to reroute the intervention when you need, and when you're scale and when you're dealing with different regions. This is super critical. So I do think that seeing this bond in action, and we have very amazing partners that joined us on this, is really interesting. We are leaving a material, I think, it's in the portal here, in the materials area for the portal, so you can get more detail, and if you have more questions later, happy to answer. But this is a very exciting project.
Thanks, Katerina. As you mentioned, pricing nature-based solutions is incredibly hard, and also aligning incentives is quite challenging. So it's like really interesting to see how this model has been introduced, and we haven't seen something like this in the context of small-scale fishes globally. So thank you for sharing with us here. I'd now like to turn to Sarah. As we know, small-scale fishers, as Carlos and Katerina both talked about, their livelihoods are very informal, and their ability to and unpredictable, and their ability to get catch is becoming even more unpredictable in light of climate change. So I know you're focusing on this issue at WTW. So could you talk a little bit about some of the work you are doing to like help small protect their incomes and help build their resilience against climate shocks?
Yeah, sure. Thanks, Anita, and thanks for inviting me to participate in today's event. I mean, it's always, super awesome to hear what our partners are up to in this space and to contribute to the conversation, of course, ourselves. I mean, as you and others have mentioned, right, a fisher's ability to access fishing grounds really depends on the prevailing weather conditions. And increasingly, as exacerbated by climate change, these are becoming more unpredictable due to high wind speed, heavier rainfall, higher wave height. And this is especially difficult for those in the small scale, fisher sector who are trying to operate, smaller vessels. And of course, fishers that are ultimately unable to work and get out there for prolonged periods of time due to these unexpected adverse weather conditions may suffer significant income losses and also potentially food security issues. The negative sort of implications that result from this is sort of even further exacerbated by the fact that during kind of the good periods, right, those fishers are kind of racing to fish and trying to catch, as much as they can in the better periods to sort of buffer against that more uncertain future. So we're sort of finding ourselves in a bit of a vicious cycle here that has, of course, negative implications on fish stocks, but also is increasingly impacted, those livelihoods who depend on those fish stocks. So to your question, I'll provide two brief examples where WTW is working in this space related to parametric insurance. But I guess before diving into those examples, for those in the audience who are maybe less familiar with what parametric insurance even is, super briefly, it is a form of insurance that provides payouts based on the occurrence of a predefined event, rather than an assessment of actual loss incurred, sort of the more traditional indemnity products that most folks are familiar with. So for parametric insurance, it involves a predefined trigger. You have to define that trigger event, such as a hurricane or a cyclone, with a measurable parameter, so wind speed. If that parameter meets or exceeds a certain threshold, so wind speed exceeding a certain value within a certain defined area, it triggers the policy and the insured party would receive a payout. So this payout is predetermined, right, and doesn't require an assessment of actual damages. So unlike indemnity insurance, right, which forces you to go through a loss adjustment process, it can take months. There's lots of fine print. Parametric insurance is sort of a much more transparent, objective tool that also then can pay out quickly, usually within weeks of a shock event. So back to the examples. So first, working closely with Rare, Carlos, and colleagues, and with support from the Government of Canada via the Ocean Risk and Resilience Action Alliance, ORA, we've designed a parametric insurance product to help small-scale fishers in the Philippines adapt to climate change by providing protection for lost income incurred due to bad weather days, which prevent them from safely fishing. So, okay, how does that work? Well, as Carlos mentioned, Rare has been supporting fishing communities in the Philippines for a really long time and have great relationships, a lot of data, survey information. So we were able to structure the product to consider the actual weather conditions that result from significant income losses, that result in significant income losses. So in this case, the product index combines three weather parameters: wind speed, wave height, and rainfall, into a single index that is triggered by the badness of the weather for a fisher over a 5-day period relative to what would have been expected based on previous or historical data and information. In this case, the sort of institutional piece of this, right, who is the policyholder and who are the beneficiaries. So interestingly, the Department of Agriculture, Bureau of Fisheries and Aquatic Resources, DABFAR, have set aside money from their own budget to pay the premium and will serve as the policyholder. But the beneficiaries of this policy, which will be selected via a lottery, are those fishers who have, one, registered with their relevant local government units, and two, who have committed to certain sustainable fishing principles. So it's really structured as insurance as an incentive, right? So kind of like co-benefits, double win all around in this particular case. Partners in the Philippines, we hope to launch this year. Initially, supporting in the range of 15 to 20,000 fishers, but the idea and hope is that it continues to scale and expand in future periods. It's also worth flagging that WTW is working on similar products for small-scale fishers in Honduras, working with the Mesoamerican Reef Fund and partners. And in that particular case, some of our partners are also exploring how that insurance product and fishers, having access to it would also help to unlock access to other forms of financing, for example, microloans. Just one other quick example to flag: in Melanesia, more specifically in Fiji and Papua New Guinea, we're working with WWF on a Jeff-funded project to design potential parametric insurance products for fishing communities that would ensure financial liquidity in the aftermath of a shock event for sort of two dual purposes. First, so that there's resources to support the ecosystems that these communities depend upon directly, and second, to support the communities themselves. So in Fiji, we've designed a tropical cyclone parametric insurance cover for selected villages within Tavola and Dogo that, if triggered, would provide support for impacted households, and also would enable community-led mangrove restoration efforts. So these are just two quick examples of how parametric insurance can support small-scale fishers and fishing communities more broadly, as well as the ecosystems upon which they depend for their food security and livelihoods. So yeah, back to you. Thanks.
Thanks so much, Sarah. And these are great examples of how parametric insurance is designed and to help communities who are impacted by climate shocks very often. And I have several other questions, but I'll come back to that later when we have more time. I'd now like to request Abby to play a short video that basically highlights some of the challenges that fishers contend with on a daily basis. Abby, can we play the video, please? Thank you.
2010, we were regarded as the illegal mangrove cutting capital of the Philippines. The community and the people were sort of accustomed to the idea that illegal fishing, illegal mangrove cutting are norms that are acceptable practices. All of those part of our ecosystem in terms of trying to produce food, making a livelihood, lahat sila kinausap namin. Trying to understand how their lives would be impacted if the finite resource of natural assets would slowly dwindle down. Siyempre, unang tanong, paano naman kita ko? Diba? Paano naman kita ko? So, paano ko bubuhayin pamilya ko? Ito yung naugalian kong parang income. When you're faced with risk, every morning, you have to make a decision. Do I do illegal or do I do sustainable? And when you have that risk every day, it's very difficult to ignore the impact to your family. How do we make sure that every day when they wake up, they will always do the right thing? I will always choose to do conservation, to do sustainable fishing practices, to do what is right. So what we tried to do was simply to develop a process that allows them better access and better understanding of the available resources to mitigate the risk of themselves as a fisherman and for their families. So nangyari, it impacts now your results in terms of your fish catch, in terms of your coral restoration, in terms of your mangrove protection. Kasi lahat yan, naiintindihan na nila eh. Alam namin that the environment and the ecosystems needs to be protected and preserved. But I also need to survive every day. By removing the mode of survival to a mode of, you have these options ready. So ngayon, how do you think of your future? And your future's thinking na pag-iisipan natin.
Thank you, Abby. I think this video is like really powerful. We see here Mayor Coro, who is from one of the islands, one of the municipalities where we had conducted our research in partnership with RARE. And it shows like some of the challenges that fishers face on a daily basis and the role that financial services can play in helping them adopt sustainable fishing practices while protecting their livelihoods. But at the same time, we need to be cautious that financial services are used wisely and do not create perverse incentives and promote more unsustainable fishing practices or overfishing. And I think this is a perfect segue to our next topic of discussion, which is how can inclusive finance support sustainable fishing practices. As Carlos mentioned, the small scale fishing segment still lags behind when it comes to access to finance. We've made tremendous progress when it comes to smallholder farming, but the small scale fisheries, we still haven't seen that progress. And because access to finance is a critical challenge for small scale fishers, they tend to rely mainly on their informal social networks, local money lenders, and also have patron client relationships with boat owners, fish buyers, and sellers. And while these informal institutional arrangements can be very convenient, they are often not very transparent. They have high monetary and non-monetary costs, and they can trap fishers in a vicious cycle of debt, which would further exacerbate their poverty and vulnerability. So I'd now like to hear from the panel what needs to be done. What are some of the challenges and what needs to be done to make inclusive finance work for the blue economy? I'd like to start with you, Carlos. RARE is one of the few organizations that works at the intersection of inclusive finance and conservation, particularly with coastal communities. So, in your opinion, how can we help small-scale fishers adopt sustainable fishing practices? What is the role of financial services there?
Thank you, Anindita. Mayor Coro, he pointed on something very important that it's a problem we've seen over and over around the world in coastal fishing communities. And it's the fact that the fishers, they need to figure out, as he says, every day, would I do illegal or would I just catch as much as I can to increase my livelihood and support my family? So that has so many implications. But one of the things that I want to call attention to, and also Anindita just mentioned, is the fact that fishers, oftentimes, they have to finance their operation, which is small but significant, with the first buyer, creating this patron-client relationship, which is convenient. It's part of the community. It's part of the fabric of the community. But at the end of the day, only keeps the informal status of the small-scale fishery, because those transactions, they don't leave any footprint behind. You can't actually say, okay, I've been taking this much debt from this person, therefore I can, pay formal debt, because this is the records I have, because they are informal. They don't have records of transactions. So one of the mechanisms fishers do to cope with this situation is that they race to fish as much fish as they can to sort of offset the fact that they can't finance themselves with formal financial services. And when we talk about the loans or the services that are provided in this patron-client relationship or financing themselves with the value chain, what we often oversee is that most of these loans and financial services have to be paid back in fish. So this even creates an incentive to fish more and more and more. What we've seen here is communities with access to financial services, whether informal, in the case of VSLAs, savings clubs that we help implement in communities, or formal, in the cases of Siargao. We just saw Mayor Coro. We went interview Mayor Coro. We talked to Mayor Coro. There is a program that we are doing in the Philippines, giving indemnity insurance to people in partnership with a public agency of the Philippines. So all of this for me to say that fishers need access to financial services. Otherwise, the incentive is always going to be in overfishing, which is the assets they have, and is the fish. So the inclusive financial world here has a big role to play, in my opinion, the same role they played 20, 30 years ago with agriculture. And I like to call the attention because we can draw parallels to what is happening right now. So there is a need to, for instance, de-risk microfinance institutions at the local level so they can take on giving more loans to fishers whose income fluctuates a lot. So they need to understand, they need to be able to understand the income fluctuation of a fisher. They need to be able to pair that with the closure of the fisheries. So they know the fishers are not getting that much income at the time, but they will get more income when the fish is abundant. So getting into these financial cycles at the same time supporting the formalization of the value chain is what I believe the inclusive finance world will be able to formalize and to bring into a formal economy almost 1 billion people who really are out there living in coastal fishing communities with no access to it. So we can bring some examples, for instance, in places where we work, Mozambique, Honduras. Sometimes it's very difficult to go through the red tape to formalize businesses, but we have been able to do it, right? With some support with the community. Once they have their formalized business, they can access some type of formal financing. We've seen the cases where the first buyer, doesn't even have enough cash to buy the good catch of many fishers that come ashore because they were able to. So even the first buyer has to take informal debt to the second link of the value chain. So the role of the inclusive financial world here is all to be done, right? We're seeing a segment that has a very productive economy because it feeds, as you know, and Dita just mentioned, a kind of half of the world with nutritious food. It provides livelihood for almost 1 billion people, and it not only provides the livelihood, but provides the mechanisms for the family to acquire some type of wealth. The problem is they don't have the financial mechanisms to store this wealth and to grow this wealth. So working in parallel, conservation and financial inclusion, I believe these communities will have both tools that they require. One for conservation of the ecosystem they depend on, and one for their financial resilience, which will reduce the need for overfishing. So I'm just happy in this 5 minutes, difficult to continue with more details, but I'm happy to continue with this conversation. You know, my email and all my information will be there. And I think we have proven over and over, and with the research we've been doing, there is evidence that definitely having the two programs running together improve outcomes for conservation and adaptation.
Yeah, thanks, Carlos. You raised some really important points, and we are also getting some questions in chat. So I'd like to turn to you first, Sarah. I think we have a question related to the examples you provided on parametric insurance. So, basically the question talks about how can it be made more affordable for small-scale fishers. If you could quickly talk to that, and there's also another question related to subsidies. Like, what is the role of subsidies? In helping overcome some of the barriers that we've just discussed. So if there's anybody, Sarah, Katerina, Carlos, who you want to take that question, I'd welcome that as well. And then we'll continue the discussion.
Yeah, thanks. Happy to take those. I mean, it's a great question, right? I mean, insurance does definitely come with a cost, and someone has to bear that cost. I guess first, I'd highlight the importance of customer-centric design. So in other words, understanding how potential policyholders like small-scale fishermen will purchase and pay for the insurance policy, right? This is a really critical component when you're designing these potential products, right? So if possible, you can try to, for example, align the premium payment dates with the policyholder's income streams. That can enhance affordability and uptake. So understanding the seasonality of fishing practices and seasons, right, will help inform the times at which those actors are most willing and able to pay for the premium. Another potential way would be to structure the premium payments on a more regular basis. So maybe monthly or even weekly, right? So rather than having that annual lump sum that most insurance policies take on, this could be particularly attractive to small-scale fishers whose income streams can potentially be quite a bit more volatile. I'd also highlight, the role that fishing cooperatives, businesses, associations, and sort of other legally registered organizations can play as an aggregator or group policies, right, on behalf of their members. So the policy in that instance, right, would be sold to the group. That would be the insured, preventing the insurer from having to register each, member, each fisher or beneficiary individually. This would all be sort of rolled up to the group level, having the effect of reducing the administrative costs associated with the policy, thereby on a per member basis, right, lowering the cost. And then finally, and linking to the second question, I mean, indeed, subsidies are another way to go. So in the case of the example I provided earlier, the government of the Philippines is actually providing essentially 100% subsidy for this program, again, sort of structured as insurance as an incentive. But you could envision, government at various levels, aid, bilateral, multilateral aid organizations, philanthropy, choosing to provide some degree of premium subsidy, at least in the early years of a program, which would usually allow for, the beneficiaries to sort of see the value in it and hopefully, eventually be in a position to at least pay for a portion or all of it. But indeed, I think subsidies, particularly when we're talking about products for small scale fishers, will probably feature in most cases. But yeah, let me stop there. Thanks.
Thanks, Sarah. Turning to, oh, sorry, Katerina.
Yeah, so I have a point on the subsidies too, like, since this was a question. I think the main point of subsidies is that, like, the universal challenge with subsidies is not in implementing them, but removing them, right? So we need stuff that are like feasible in the long term. And I think when we are designing the instruments, we have to think about this, right? Like, we have to think like, okay, are we putting this subsidy here and we will say forever, or are we subsidizing a transition that will be sustainable for the long term? And I think this kind of thing really has to be kept in mind, because if not, like, even for the government to commit to something that like is transitional is one thing, but to something that is forever, that will be in their budget forever, is another thing. And then it brings me to another very important lesson that we got from the Philippines, which is that, like, when we want something, especially from the government, we really need to sit down and work with them and build things with them. I think a very good example that I was talking to Carlos recently is that, like, you go to a local government unit, and then, like, the person responsible for marine conservation is one, but the person responsible for regulating the economic activity of the fisheries is another person. And who do you talk to? These people, sometimes they have like diverging incentives and diverging interests. So you need to, like, bring the data together, think how to structure something that goes across budgets, across organizations, and across incentives. And instead of, like, just waiting, say, like, okay, hey, government, here's it, please subsidize. You need to, like, understand how they think and understand what is viable for them to then build the thing.
Yeah, thanks. And I think you made a really great point that removing subsidies is, like, incredibly hard, and that's something we don't, like, factor in a lot. And this has been a great conversation, and I'd like to keep talking, but we are coming up on time. We have a couple of minutes left. So in less than a minute, I'd like to ask each of the panelists to, quickly share what their call for action would be for the sector, like what needs to happen to make blue economy an integral part of the inclusive finance agenda. And since we are already at you, Katerina, I'd like to start with you.
Sure. I think for me, it's be creative. So build new and robust instruments, but also realistic. Like, if you want millions to trillions, build instruments that can meet the market and that can meet the needs of those who will fund it in the end. If not, things will remain on the paper.
I see. Sarah?
Yeah, thanks. I mean, totally echo Katerina there. I mean, I guess, yeah, there's no silver bullet solution, right? But there's a number of efforts out there ongoing, some really interesting public-private sector ones. Earlier, I mentioned one, Aura, definitely worth checking out. I mean, I would encourage, the inclusive finance community to kind of engage with groups like Aura involved in the blue economy, both to learn more about it, of course, but also so there can be sort of that two-way learning and sharing experience to just capitalize on all the amazing work that I think both of those communities are doing. Thanks.
Carlos.
Thank you, indeed. And I would say just inviting the inclusive finance community to have a look to the coastal fishing communities, the value chain. It's an abundant value chain. It's valuable. We need to do a lot of things. We need to formalize the value chain. We need to de-risk the value chain. But more important, we need to invest in a value chain that will be able to deliver sustainable fishing for meeting our conservation outcomes, because that's where we are. So yeah, thanks everybody. And thank you, Anandita, for inviting us.
Thank you. This was a fascinating discussion, and I wish we had more time because you raised so many interesting questions that we would love to get more into the weeds of. But I want to conclude by thanking you for your participation today and thank the audience for their participation as well. 45 minutes goes by really quickly, as we saw in discussions such as this. But thank you, everyone. I wish you a good day ahead. And don't forget to rate the session and enjoy the final day of Financial Inclusion Week. Thank you.